This is our Forex blog for October 15th, 2012, and it's going to be one of our best. So make sure you watch the entire thing. I'm also going to unveil something I've been working on for a while. This is the currency meter as we've had it in the past, relative past, and it's consisting of the build your own currency meter, which compares, in this case, the yen versus all the other pairs on multiple time frames. Some of them measure the percentage of yen pairs going up or down, and other ones measure the intensity of that up or down movement, and it averages it together into one easy to read indicator. Underneath that, we have the 15-minute trend, hourly trend, what percentage of yen pairs are going up or down on both time frames, then the daily, weekly, and monthly. A lot of traders, obviously on down days like this when the yen is pretty much weak on all time frames, it's very intuitive and very easy to use. However, there are times where you can see with the dollar, the real-time trend's down, 15 minutes down, the hourly was up, the daily, weekly, monthly was up slightly. The daily switches down at 3:30, where the weekly, monthly switches up. What time frame trend do you trade? Do you trade the real-time one, the 15, hourly, daily, or do you pay attention to the weekly and monthly? So a lot of traders told me that, they weren't making money with the currency meter. It confused them. For people who aren't as visually inclined as I am, and some traders are, it was difficult to know which direction to trade in, like the Australian here. The real-time trend for the most part is up. The 15-minute is down until about 7:30, then it switches back up. The hourly is up pretty much the whole time. The daily is just barely up. The weekly was down for a brief bit, then back up slightly, then more so. The monthly trend is pretty strongly down. So what I've done is I've reformulated the Build Your Own Trend tool to allow people to use a currency meter that weights every single time frame into one reading. And I'll right-click on the yen here, and you can see the new Build Your Own Trend indicator. These two stay the same. I've added an extra power index. This measures the percentage of currencies trending up or down. The first one is using 5 pips per bar range chart in our digital signal processing ultra-fast moving average, and this one uses a 15-minute hourly trend, but I only give these a small weight, 6%, 5%, to show a little bit longer time frame in here. Then I've also added the daily, weekly, monthly trend to this. 18% weight for the daily, 13% for the weekly, and only 4% for the monthly. But it does, if two currencies have similar trends, 4% might make the difference and might have you trading one currency more than another. Now, the downside of using longer time frame statistical models in this is that it can be a little bit slower in switching trend. But what I found is it's only about a half an hour to no more usually than an hour, hour and a half later in switching trend. You can see the yen started off strong last night, a little bit of weakness here, and at midnight here went weak. Here's what it looks like on the previous one. The yen had a little bit of weakness last night, a little bit less so, and really a lot of intensity of the weakness came in around 11:25 right here, so around 11:30. So in this case, it was really about a half an hour late in switching, and you can see during this phase right here, a couple hours leading up to it, it basically didn't show much strength, and it lets you know that possibly the uptrend was over. Now, the benefit of combining all these time frames is, one, it's simpler. It's visually intuitive to look at this and know which currencies are strong, which ones are weak. You can set it up any way you want. You can weight the daily, weekly, monthly trend at only 15% weighting and have 85% for faster real-time trends if you want. Or you can, if you're a longer-term trader, have maybe 30 or 40% real-time trend and 60% be the longer time frame trends. Maybe you care more about the weekly and monthly trend than you do the shorter time frame ones, and you're looking to buy, let's say, the lower containment band if the longer time frame trend is up, which is a wonderful strategy and it works. So how do you use this? The first step of our currency meter, and it's even more intuitively obvious now, is to find one currency that's weak, another one that's strong, and simply buy the strong one versus the weak. So clearly between the dollar and the yen, most people trade either the dollar or the yen pairs versus the bottom ones. Clearly at midnight right here, and even beforehand, there's a little bit of weakness, and the weakness was more than the tinier, lesser amount of strength right around 11. You want to sell the yen. Now, which currency was strongest earlier in the night? Well, here's the euro. It was weak coming up to midnight, so you probably didn't want to trade that one. The Swiss didn't really have that much strength either. Let's take a look at the CAD. We'll go back. It didn't have that much strength either, but it certainly wasn't as weak as the euro was. The pound wasn't strong. The New Zealand was extremely weak. And this one was relatively weak too. So it becomes a little bit harder. You probably would have wanted to trade the dollar, which was strong, against the yen until the dollar's strength kind of fell off. Dollar yen from 11.30 to about 3 is a very high probability one. I don't typically leave this one running because I don't like the dollar yen most of the time. They tend to have the same time frame. They tend to go up and down together. But coming up to 3 o'clock, you can clearly see the dollar was the one to buy. And basically you want to buy pullbacks or sideways consolidation. So this breakout is one trade here. You want to wait for at least a 15 pip pullback. The dollar, you can relax that a little bit. You buy that breakout right here. Always put your stops underneath the swing low, and always draw your fibs to get an idea of where the next fib target is, so you know where your profit is. So you got into this trade right here. You didn't get stopped out as the market went sideways, and notice how it stopped right at the both fib targets. So you get out of half your trade here, and I would have got out the other half right there. So that was the first trade of the day. And then obviously the yen's weak. We want to scroll these charts back. You can see the euro got really, really strong here at 230. And again, it's much simpler to just look at one reading of the overall trend than multiple different time frames, which can and often are conflicting. The monthly trend might be down, the weekly trend's up, the daily trend's down, the real-time trend's up. What time frame trend do you trade with? Well, you always give more weight to what's happening right now because new trends always start on the fastest time frames, and then they go to the next time frames, and then they go to the next time frames. A downtrend on the monthly basis can take 2 weeks to switch. A downtrend on a weekly basis can take 3 to 5 days to switch. An hourly time frame downtrend can take 3 or 4 hours to switch. So obviously the faster time frames are very important. I weighted them 65% pretty much of this, and the rest for the longer time frame. So the euro, very strong. The yen was clearly weaker than the dollar. We want to buy the strong euro versus a weak yen, right? And look at this chart. Now, this build your own trend tool here, let me move this up a little bit. This one, I did not put any of the longer time frame trends into it because I want to show and see in real time. Once you identify the trend, you want to know, and you want to see this trend go up or down and see new trends come up real fast. So in this one, I did not weight the longer time frames into it, and you can do this with yours as well. 15% weight to 5-minute trend candles. It measures percentage of currencies going up or down. 25% weight to the 5 pips per bar range chart. Displace moving average method. This is extremely fast, and it's very low noise at finding new trends. 30% to the ADX 5 pips per bar range chart. And then 15% and 15% to the 2-minute and 5-minute. This measures the intensity of 2-minute bars and 5-minute bars of all the pairs. How much are they going up during this 2-minute bar and that 5-minute bar compared to the last 20-day average? And as you can see, I have no weighting at all of the daily, weekly, monthly in here. So these are pretty much very similar to the older build your own trend methods. And by having this on here, you can see once you get into a trade, if it jumps to 80 and stays at or above 80, you have a very strong trend there. And so here's 230. This currency is underneath the point of control of Friday. This is last week's point of control. When it's above last week's point of control, the hourly and especially the daily, the the previous day's point of control, it's very likely to go up. Being above the weekly is good enough, and at 2:30, the euro was one of the strongest and the yen was the weakest, so we're buying this breakout here, and you can see, from 101.50 went up to 102.30. You could have got in here, used the trailing stop, got out with 25 pips, buy this pullback, made 15 pips, buy this pullback, made 20 pips. Nice little sideways breakout. Maybe you lost the first time, and the second time you made 15 pips. You bought this pullback right here. Maybe you made 5 or 6 pips, lost a little bit here, and made 15 pips here. The point is, the currency meter, step one, is to use a new currency meter to know which currencies to trade, and then find the entries on those charts. Now, the Swiss also was very strong, and it really hit incredible intensity at 3. I don't usually leave the Swiss yen running meter, so we'll bring that up, and we'll look at it after 3. You want to buy the strong Swiss versus a weak yen, and we all know that the Swiss is pegged to the, sorry, let me bring this up here. It's underneath these charts. You can see 3 o'clock broke the high and went up from 84 to 84, pretty much 60, went up 60 pips. So you might have made 10 pips, bought this pullback 15, bought this pullback 20, bought this breakout here, you would have made 5 to 10 of that move, bought this pullback, made a little bit, bought this pullback, made very little. But the point is, you wouldn't have had a single losing trade by using this. And it's, instead of looking at the Swiss right here, where it was pretty clear at 3, all the time frames were up. But earlier than that, we have the real time down, and there's a little bit of up strength. The 15 minutes down, the hourly's down, the daily's down, the weekly's pretty much mixed, goes back and forth. The monthly's pretty strongly up. What time frame do you trade with? And this is what confused many new traders. You can still use the currency meter like this if you want. It's totally, that's why we called it to build your own trend. You can build it however you want. This works live only because we have so many different time frame trends. There's no accurate way to line up all these time frame trends on past bars. It only works live. When you bring it up, like I did last night around 6, left it running. Most people trade on powerful home machines, not laptops, and they have multiple monitors that are serious about trading. Trading's a business. There's no better business than trading. If you're a good trader, obviously you can make more in 1 or 2 hours than most people do in a week as a good trader, and very good traders make more in an hour or 2 than most people make in a month or 2. But the point is, trading is fun, and it gives you the freedom and opportunity to do whatever you want the rest of the day, which is, one of the better parts about trading. So instead of having to look at this, with the new build your own trend tools we're releasing today, you will have the ability to really find some of the highest probability trades. So let's scroll forward and let's look at coming into 6 o'clock when the U.S. session is. And clearly here, the CAD also was very strong. So you want to buy the CAD versus the clearly weak yen. All right, 230 here. Breaks out, goes up, buy the pullback, goes up, buy the little sideways rectangle pattern, breaks out, bought here, you probably would have lost, bought here, made a little bit, bought on the next pullback, made 20 pips. You're not going to always have currencies like the Swiss yen where every single trade works. But the point is, and the goal is to have bigger wins on your winning trades. For instance, if you're losing 6 to 10 pips when you're wrong, you want to be making 15 to 30 pips or more when you're right. And you also want to be right more than half the time because, we're all human and we like to, be right. Now, earlier today, the yen was quite weak from 230 till about 6, and you can really clearly see the drop-off in weakness. If you see a currency that's weak, and then during the next move it doesn't hit the 80 level, you know that many of the time frame trends are switching. Maybe the daily and weekly is switching up a little bit, or the hourly or 15 is switching up. And when you see something like this, that trend can continue or it can reverse. And once you see it reverse, you can start looking for buys in it. But earlier today, for a couple hours, the New Zealand was quite weak. You could have traded that against the euro or Swiss, which was the strongest. And let's take a look at this currency here. Euro New Zealand is obviously going to be going up during those time frames. Later in the day, the New Zealand got really strong, but like I said, 3 to 6, guess what? Went up, bought the pullback, went up, by the pullback. You might have lost here, but the pullback made money here. And notice from 7 to 1 o'clock it going down. Well, why is that? Let's go back to the currency meter. Well, the euro pretty much around 10 lost its strength, and the New Zealand, as you can see, pretty much around 6, and especially after 10:30, became strong on almost all time frames. So let's say you notice it right here at 10:30. Well, the euro is no longer strong. You certainly wouldn't trade the New Zealand versus the euro on the downside. You would trade the New Zealand versus the yen, which was consistently weak. Notice lack of any strength whatsoever here. You clearly are better off selling the New Zealand, or I'm sorry, buying the strong New Zealand versus the weak yen, after 10 o'clock. So you got this nice little pullback here, and this went up 30 pips. No-brainer trade. Absolutely no-brainer trade. It's above the weekly point of control, the average price last week, and it's been trending up very strongly. It pulled back with a little bit of intensity right here, then it lost the weakness, and as soon as it starts going back up, we're buying, and it takes off. And really, it's that simple. The currency meter, to me, I've always understood the multiple time frames. I like to know when a currency is strong or weak on all time frames. Buying the Swiss is a no-brainer versus some of the weaker ones, the New Zealand earlier in the day. Later in the day, the intensity came back. But the weekly trend only shifted up around 11:30, and the monthly trend is still down. That's why it really started to show a lot more intensity after that 10 to 11, when all the longer time frame trends started switching up. The real-time trend was up as well. It's obviously a lot easier to read something like this. Very strong CAD, and you certainly could trade, sell the dollar versus the CAD, but you're better off buying the CAD versus the yen, which is clearly weaker on some of the pretty much all time frames. It can't possibly mathematically get at or above the 80 level if you don't have the vast majority of the trends going down, and going down with incredible intensity. So today you wanted to be buying the CAD yen, but if you wanted to trade the CAD versus the dollar's on top, so you sell the dollar CAD. I'll end today's blog looking at the dollar CAD. Obviously this is earlier in the day, later in the day. As you can see, a little bit of strength came in here at the 10, and the CAD lost its strength. But before 10, dollar CAD, excellent one to be looking for sells. Drops, nice little sideways move here, drops, pullback trade right here would have been a small loss, maybe 5 pip loss. Short here, made money, short here, made money. And here's 10 o'clock. To no longer be selling this because the dollar's starting to get some strength, the CAD is starting to show some weakness, and of course that led to this move up. But a lot of times at the upper containment bands and major resistance areas, previous day's high, which was a resistance area before, if you're an aggressive counter trend trader, you can short that, mainly because double tops, double bottoms are frequently the end move of the day. Plus this thing rallied up here. If you drew your fib from here to here, it looks like a 2.0 fib move, which is almost always the end of the move. Here's the 2.0 fib move right here at 13. We got all the way up to 11. Only 2 pips away from probably 85% max high of this move. So that's it for today's class. There will be a new release today which has new FX trade signals in it, which I'm going to go over in more detail tomorrow, and the new build your own trend indicator. You might want to experiment with different settings on this. I recommend for the currency meter to incorporate some of the longer term daily, weekly, monthly trends in this, but for the individual charts I would leave them off so you can get a much faster feel for how trends up and down are developing.